Should I build out more ADUs on property? Should I add more rental units to my portfolio? One thing I want to say to everyone that's either building a company that has properties that have a lot of equity in them, always understand and ask yourself this question. If I can get my hands on $400,000, $500,000, $1 million right now and invest it properly, what does that do for the rest of my life? What does that do for my retirement? And in this situation for Angel, I would sell the property in a heartbeat. I would put that money in all the right accounts and do all the investments we talk about every single week and every day on this podcast. And I would ride off into the sunset, because then you're guaranteeing yourself to be a millionaire or a multimillionaire by the time you're 60 years old. That's what I would do, because here is the opposite opportunity. Let's say you build the ADUs. It goes okay. They don't cash flow very well. They don't have capital appreciation like the normal house did over the years you've owned it. And then all of a sudden you have all of this extra debt, presumably through a HELOC, which is going to cost you 8%, to be able to build these and then absorb a lot of the equity you already have built. Because remember, you take out this big loan. Let's say each ADU is $80,000, $90,000, $100,000. Well, that loan's coming out of your equity. So then all of a sudden, if it doesn't cash flow like you'd hoped, and it doesn't have the capital appreciation, you're going backwards rather than forwards, because they're never going to cash flow that much.